Alright, today I'm going to show you how quickly I can build a 25 coin portfolio of the top cryptocurrencies in the world extremely quickly and securely using the Abra phone app. Currently I am in the mindset that the market's going to go up, so I'm going to use the super risky strategy. And so you can see before I've deposited my money into the calculator, it's telling me what my position size is on each coin: 5% Bitcoin, 10% Ethereum, 8% Ripple, 8% Bitcoin Cash, 8% Litecoin, and you can go down the list. Now some coins are marked 0 because they're currently set to have a 0 weight level in my software application. However, if I did want to add those positions such as EOS or Tron or Cardano, I could easily do that. Now before we get started, let's take a look at how the software will look when we go to the risky settings. I'm going to go ahead and trigger new update, and we can see now it's taken some profit out of the portfolio. It's put 18% into Tether, 49% into Bitcoin to preserve the profits, 14% Ethereum. You can see all the altcoin positions have dramatically dropped. And then finally, let's take a look at the smart strategy. And now we're looking at the smart strategy. You can see it's pulled out around half of the profit to USDT, 36% is still riding in Ethereum, 10% Bitcoin. And now the altcoin positions have gotten very small. So to quickly compare, when we believe the market has a long ways to go up, I like the super risky strategy. Almost all of the money is sitting in the higher risk altcoins. When I get a little nervous and want to take some profit off the table, perhaps there's a big run up. We don't think the total run up's over, but we do think there might be a short-term pullback. Well, this is a good setting to toggle to take some profits off the table, and then you can buy the dip back and switch right back to the super risky strategy. Now when we get towards the top of a market cycle, and so I'm talking about after it's broken past all-time highs, doubled itself, and it's just going straight up, and it's acting extremely irrational in terms of just straight up movement, that's when I'll get ready to switch to the smart setting and expect a crash ahead. And that's because when this happens and it goes parabolically straight up, the best gains happen, but you cannot predict when it's going to end and when it's going to crash. And typically when too many retail investors jump in all at once, we get a big crash in prices. I've seen it happen about every 3 to 6 months since I've been trading Bitcoin. Now, because we've just had a mega crash this year, I'm confident enough to use the super risky strategy, which means I'll have the maximum volatility in my portfolio. But because we just experienced such a mega crash, I feel safe in predicting that the market will eventually go back up this year and break into new highs once again. And so when we study the big picture and look at the big picture, you can see the volume is coming back to healthy levels. This crash is consolidating, and I think we're headed to bigger highs than we saw in 2017 by the end of 2018. So now let's go to the editor. I'm going to go ahead and select the super risky strategy, go to my deposit, and for this trading video, which is just a demonstration of the software, I'm going to type in how many Bitcoins I have in this sample account. And so for this sample demo account, I have about $970 I'm investing into Bitcoin, and the current price is $8,498. So essentially what I want to do is track what my return is after starting at a $970 value with Bitcoin. So I'll trigger an update, and now it's going to tell me in my money manager exactly how many coins to buy or sell to achieve the target position size. So this is updating right now. And so we'll review the 3 settings at this point in time. Do realize these target sizes are based on the last 7 days of trading volume. So it's very hard to trick the strategy wherever the money's flowing is where our strategy will be flowing as well. And as the trading volume dries up for a coin, that will alert to take profits. So the super risky setting is primarily holding the altcoins in position sizes between 1 to 5%. If we go to the smart, or rather the risky strategy, we can see the target size is about 20% cash, 50% Bitcoin. And again, this is when we think there's going to be a short-term dip to buy, and we want to take some profits off the table and be able to buy back into a dip. And then the smart settings actually when we think we're in crash territory. We're talking about a major 50 to 80% crash ahead. This is typically when the biggest gains are to be made, but it's also the most dangerous time. So that's why I like to get about half cash, keep that profit on the sideline, and then be ready to buy a mega crash with this strategy. So we're at the point in time where we just had a mega crash. We were patient, we waited a few months, and the market seems to be rebounding, so we're going in with the super risky setting. Let's check it out. So you can see I have a 100% position size in Bitcoin, even though it says I should only have a 4.8. And if I come over to the money manager, it'll tell me how many Bitcoins to sell in column E to purchase the right amount of altcoins in column A. Now you could do this with a lot of exchanges. I have options over here. I like the Abra app. It's free, it's secure. The way it works is you get your very own Bitcoin wallet and Litecoin wallet that has a smart contract with Abra. So while they expose you to all of these coins in their portfolio, based on the return of the altcoins, they debit or credit your Bitcoin wallet with the actual currency of Bitcoin or Litecoin, so that you see the same gains of holding these altcoins, but you don't have to have all the risks of using a centralized exchange. And at any point you can withdraw your money out of Abra to a private wallet such as a Nano Ledger S, the Trezor, whatever it is you prefer to store your coins in for the long term. And while I do critique that the language of the smart contract is not public, they keep that as proprietary. They are a California-based Silicon Valley company. They have the VCs behind them. They raised $30 million. They have a good reputation. So that's why I feel safe using the Abra app and recommend it to anyone trading portfolios smaller than 100,000. We have a lot of clients trading much bigger than that, and that's when we start doing more advanced strategies, spreading the risk to as many different locations as possible. But for most of us, we're trading a lot less than that, and we'd rather just have a fast, easy, effective strategy to make a killer return. Now, I did want to put a little update in this video. My initial critique of Abra was that we don't really know the source code behind the smart contract that makes their platform possible. They're giving you this access to 25 of the top coins, but how exactly are they doing that, and what is to stop Abra from just emptying out our account? So I wrote their CEO and founder, and what's really cool is this guy is writing back. Essentially, I said, how can I put my reputation on the line without there being open source code to review by the peers of the blockchain community? It makes it feel like this is a risky kid's toy instead of a serious investment tool. My question is how Abra app can gain the trust of larger investors without relying on its organization's reputation, but just purely on its open source code and rules. And so Bill responded, you're asking the perfect question. We're rolling out Abra in phases. The initial phase definitely requires the user to trust Abra as the counterparty to the multi-sig contract 2 of 2 multi-sig. The second phase, planned for late summer launch, will address this issue. To address the trust issue in our multi-sig contracts, we're changing our platform to use a third-party smart contract oracle as a third signatory to the smart contracts. This oracle will be a non-profit open source entity that other companies can also contract with. This will alleviate concerns for needing to trust Abra and is more transparent than an ETF. So in short, if you're still skeptical of Abra, the solution is to hold around 20 of the smaller positions in your portfolio on the Abra app, and then to keep the 5 larger positions, which would be your Bitcoin, your Ripple, your Ethereum, your Bitcoin Cash, and perhaps one other coin, securely on the Ledger Nano S. Okay, so let's jump back to our getting started video. So let's jump into it. So I'm going to switch over to the Bitcoin selling tab, because what I'm going to be doing is selling Bitcoin to buy these altcoins. And I like to have 2 tabs open for the editor when I'm doing this. One for the money manager and one for the tab where I'm going to input my trades. Okay, so let's go ahead and do the first trade. And you can see in column G what dollar value we're going to hold of each coin when this is all done. So the first one's going to be to buy my Ethereum position. And if I click right here, you can see I'm supposed to sell 0.0119 Bitcoin to achieve that. So to do so, I'll hop on over to a recording of my phone app where I've selected my Bitcoin wallet. Now I'm scrolling down to click on the Ethereum wallet. I'm going to type in 0.011 and then hit review and confirm, and the trade's done. So now let's go back to the spreadsheet and see how we enter it into the Portfolio Builder platform. Okay, so now I'm looking at the confirmation screen, and I'm going to input it into right here. So I sold 0.01191 and I received 0.1382778 Ethereum. There was no commission cost. And the date was 5/22/2018 when I bought the Bitcoin and sold it for my accounting purposes. And now what I can do is trigger an update and it will look up the prices. And now you can see it's automatically calculated the price of Bitcoin and Ethereum at the time of purchase. And if I go ahead and insert my original buy cost, you can see my profit for tax counting is -8 cents. So let's go ahead and hop to the next coin. And if I want to make a note, I can just bold that and go to Ripple. Let's see, I need to sell 0.0094. I'm going to round that up to just 0.001 Bitcoin to get around 115 ripples. So I'll come over here to where I'm going to input this. And I can actually input this part of it before I go to Abra, because I know how much Bitcoin I want to sell. And then I just have to get the real number purchased from the Abra app. So let's flip to Abra now. So go ahead and click on Exchange, click on Bitcoin, go down to Ripple, type in the amount of Bitcoin to be sold, hit Review, and then hit Confirm, and you've just converted Bitcoin into Ripple. Okay, so now we'll type in the amount of Ripple we purchased, 120.195241. Copy the same original buy cost for Bitcoin right here, and then this is for your tax rate, if it's long-term or short-term. And we can trigger an update and it will update this trade. Now while it's doing that, I'll just go to the next trade. So Ripple's done. Let's look at Bitcoin Cash. So we're going to sell 0.001 Bitcoin to buy around 0.06 Bitcoin Cash. Let's come to here while it's still updating, and no problem, 0.01. And now let's switch to the Abra app. Press on the Exchange button, click on Bitcoin again, go down to Bitcoin Cash, type in the amount of Bitcoin to sell, and then once again hit Review and Confirm, and now you own some Bitcoin Cash. Okay, so now I'll finish in the rest of the order. Let's see, we got 0.066332 Bitcoin Cash, and I can copy this same data down. And we're ready to go to the next trade. Now do note sometimes it takes it a while to pull these prices, so just be patient with it. So let's go to the next coin. EOS is not currently a trade we're doing in the 1.2 portfolio, as it's not supported by Abra, and I'm actually getting ready to exit that in our advanced strategy anyways. Okay, so we're doing another 0.01 trade on Litecoin. Go ahead and type in 0.01. Get ready to get the purchase. I'm going to flip to Abra. Click on Exchange, tap on the Bitcoin tab, go down to Litecoin, tap on Litecoin, insert the Bitcoin to be spent, hit Review, hit Confirm. You're now the proud owner of some Litecoin. And now we can type in the amount of Litecoin we purchased, 0.598058. And then I can grab this, grab the two dates. Okay, continuing on, we're going to skip Tron coin. This is another coin not supported by Abra, and actually a coin I'm intending to dramatically reduce our position in the advanced strategy. I believe that EOS and Tron are going to have a pretty serious crash at some point in the 70 to 90% range. So the next position we're going to fill is Qtum, and it has a 0.0055 position with a value of around $46. So it's important to know that in the Abra app, you have to do at least a $5 purchase. So I'm going to round it up to 0.0056. And now I'll go ahead and jump into the Abra app. Once again, hit Exchange, click Bitcoin, type on the Qtum, and then after that we'll place our order. Now if you want to skip a position because it's less than $5, you can do that, or you can always round up to $5 and it will tell you if you're under that. And now I will input the amount of coins purchased, 2.8048692. Fill in the date. And it says it's a loss, but that's because it hasn't filled out this yet. Now I trigger an update. And we can go back to our money manager. The next coin is going to be Ethereum Classic. So I can mark Qtum done, go to Ethereum Classic. And let's see how much Bitcoin to sell, 0.0052. So I'll just round up to a little more. 0.0053 is what I will do. So now I'm going to go ahead and flip to the Abra app. Tap on the exchange button, click Bitcoin, go down to Ethereum Classic. And now we do the same process, type in the amount of Bitcoin, hit Review and Confirm. And now you're a proud owner of Ethereum Classic. Okay, now you can see I've inputted that trade, and I'll get ready for the next one. Cardano's not in the Abra app yet, but Neo is. So I'll go ahead and mark that as done. Now I'm doing Neo. And the cost is going to be 0.004. So I'm just going to go to 0.0045 to round up a little bit. And so now I will hop to the Abra app to place the order. Now one thing to keep in mind, if you do decide you want to sell your Neo back to another coin, don't sell it straight to Qtum. Abra gives you that functionality, but our accounting won't deal with that well. The best way is to sell it back to Bitcoin and then buy whatever coin. And so you can see I've inserted my new coins. Can go ahead and trigger an update. You can always do the trigger update all at the end if you like. And now we'll go to Stellar. How much Stellar do we need to buy? Let's just go to 0.006. And now I will hop over to the Abra app. So another thing to keep in mind is if you're on the free version of the software, you'll already be done by now, as you only get the top 10 coins. Now if you're on our paid program, you get all Abra coins, and as they add coins, we also automatically and dynamically add them to your platform. Okay, so I've got the rest of that trade filled out. Can trigger an update. And I think you're starting to see just how easy this is. So I'm not going to make you watch me do every single coin one by one. But what I will do is go ahead and fill out the rest of the portfolio without recording it, and then come back and we'll look at what we're seeing in our viewer. We'll see exactly how our portfolio is balanced, what our target size is, what our position size is, and a little bit of strategy. When am I going to take profits? When will I rebalance the strategy between these different settings right here? And we'll talk a little bit about what my predictions are for the Bitcoin market in the next 12 to 24 months. Okay, so I just got done filling in the rest of the trades. Same process as before. I triggered an update, and you can see I did lose about $8. So every time I'm going to trade around $1,000 worth of crypto coins on Abra, you can expect to spend around $9 to $10 in total commission costs, which is a little bit higher than a normal exchange, but it's not bad. And considering I can now sit back and let this portfolio rip, I'm very excited. So let's just take a look. We can see our target size in column F, and we can see we got pretty close to matching that in column E. Now the Bitcoin is a little low, and if you noticed, every time I did a trade, I rounded up because I really am just having that as a buffer to be able to measure how much Bitcoin to convert into crypto coins. And whenever I take a profit, I'll sell back to Bitcoin, and then from Bitcoin to cash if I need to, or back into an altcoin if I'm still bullish on the market. So we're set to jet. It was painless, easy. And now I'll flip back to the Abra app so you can see how it looks on my phone. What I really like about the Abra app is I can quickly see the value of my total portfolio straight from my phone, and I can see the value of each position. So now every day when I want to see what I do with my portfolio, I just come over to the Money Manager tab. I trigger an update. It'll update all the prices. It'll look at the trading volume of all the coins. It'll see which coins are becoming more popular or less popular. And it's going to tell me what to buy and what to sell to rebalance. Now, I don't like to do a ton of balancing. Really just when Bitcoin's breaking into new milestones is usually when I'll rebalance a coin. But this strategy works very well, and I really hope you'll join our team, join our Telegram group, and build your own portfolio just like mine. To close out this video, I'd like to talk a little bit about market predictions and strategy. To understand my market predictions for Bitcoin and other cryptocurrencies, it's really important to look at the big picture. And to understand the big picture, we really need to understand a little bit of the history of money. Perhaps the most trusted and time-withstanding form of money has been gold. It's been used as a means of storing value for approximately 3,500 years. But what was wrong with gold, and why are there dollars and pesos and pounds and so many different currencies? Gold had drawbacks. Gold isn't easy to find, so you may not have enough gold for the growth of an economy. Only rich people can afford to mine gold, so they controlled the supply. Fraudsters made fake gold. Even today, gold is heavy to carry around. It's not easy to break a gold coin or bar into tiny pieces, so it's not useful for average day purchasing. So that's why society came up with paper money pegged to gold. Paper money was an IOU to exchange for gold at a bank. At first, it had all the benefits of gold, but it was faster, lighter, and easier to use. This gold-backed money supply was used for approximately 450 years. But around 1933, when the Great Depression hit, something big changed. Franklin D. Roosevelt depegged the dollar from gold at a local exchange within banks, which allowed them to pump money into the economy and stimulate spending and growth. Now, most economists agree this helped America survive a tough time, and it's something that all the economies around the world did together in the next 40 years, creating what we call a floating currency. By 1971, President Nixon cut off foreign countries from being able to exchange gold for dollars, which further allowed the government to create as much money as it felt it could to be competitive around the world. And not just America did this, all the major economies depegged their reserves from gold and began aggressively printing money. And perhaps this can be used as a successful tool for controlling marketplaces and preventing Great Depressions. But the problem is the central authorities in charge of this have never stopped printing money. And instead, they're actually speeding up how quickly they do this. And so you can see the purchasing power of the US dollar has been dramatically declining relative to the purchasing power of currencies such as gold over the same period. So while the dollar has gone from $1 in value to relative 5 cents, gold over the same time frame has gone from $400 to $1,600 an ounce. And so now the United States has gone into extreme levels of debt, trying to prevent yet another Great Depression. And in this chart, we can see it doesn't matter if a Democrat or a Republican is in office, the debt is growing exponentially. And really, ever since 1970, when we depegged the currency from gold, there's been no restraints. And in fact, America's 2018 budget deficit is 10% shy of the 2008 financial crisis banking bailout. And so while supposedly the last 10 years of creating tremendous amounts of money and pushing it into the economy was supposed to solve all our problems, we're now back to crisis level deficits in our budget. So who's loaning America all this money? They must be rich, right? Well, here's the funny thing. The biggest buyers of our foreign debt are China and Japan. But wait a minute, they're also in tremendous amounts of debt. In fact, the top 3 countries in the world with the most debt are the United States, Japan, and China. The entire world has gone absolutely crazy. There's now a record of $164 trillion of debt around the world. The central bankers are loaning money from one country to another country in a big circle. And you thought Bitcoin was crazy. Did you ever realize how crazy our monetary system really is? Every major currency around the world is losing its purchasing power relative to gold, and the weakest countries will go bankrupt first. The death of a currency happens when you get hyperinflation. And currently, we just saw a bankruptcy in Venezuela hitting nearly 18,000% inflation. But there's other countries experiencing tremendous inflation. These are the early warning signs. Venezuela's Grim Reaper hyperinflation. And so you can see the value of the Venezuelan bolivar has crashed to nearly nothing. And it did it in less than a year. Countries are leveraging their GDP to double or triple their spending power through debt. So here's just a snapshot of who's taking advantage of their power among the world to inflate their currency. And here's just a short list of some of the countries whose currencies are most likely to continue declining in value because of this. Japan, $9 trillion in debt with a 220% debt to GDP ratio. Greece, $379 billion in debt with a 179% debt to GDP ratio. Portugal with a $264 billion in debt with 380% debt to GDP. Italy, $2.4 trillion in debt. Belgium, $456 billion in debt. The USA with a whopping $19.2 trillion in debt, spending twice our GDP. And the list just goes on and on. The entire world has been doing this in order to compete with one another. The compounding interest, increasing deficits, and political inability to stop this vicious circle will continue to devalue fiat currencies for the foreseeable future. No politician will ever be elected who slashes health, retirement, or defense budgets. So the debt will continue to grow and grow, which is what's gradually increasing the value of Bitcoin year after year and will continue to do so. So let's talk about the story behind Bitcoin, which I think of as the sun powering the universe of all cryptocurrencies. During the 2008 financial crisis, the idea for Bitcoin was born. It has since gone from a value of a tenth of a third of a penny, so it's a very tiny amount of money, to as high as $20,000 per Bitcoin in 2017. Bitcoin is digital gold, and every $1 invested into Bitcoin turned into 6.6 million from 2009 to 2017. Bitcoin discovered how to create a new form of money that fixed previous systems, and it did this through the decentralization of authority and control of the money supply. Old money had powerful elected leaders controlling the money supply. So think about this. The bank controls when you can access money, where you can access money, how much you can access at a time with withdrawal limits. It controls the fees to use your account. Banks can freeze your money. They can set interest rates on loans. They decide who's eligible for loans. And they even have control of who accesses the monetary system. Billions of poor people around the world don't even have a bank account. Money gives central authorities control over the world. And in 2008, Bitcoin's 8-page white paper aimed to create a decentralized monetary system. Open to everyone to participate, always accessible 24/7, 365, available to access worldwide, trustless, with no central authority with ultimate power, impossible to hack or steal from, with exclamation points because there is some caveats to that. Clear and fair rules everyone agreed to, a rare limited supply, and spoiler alert, Bitcoin accomplished all of these goals. And this is why smart investors around the world are buying up Bitcoin and other cryptocurrencies. As fiat currencies continue to become worth less and less, the value of Bitcoin and other cryptocurrencies will go up, up, up. But what exactly is Bitcoin? What if I told you it was just a puzzle? What goes in the blanks? 3 and 6, right? Well, Bitcoin is basically a gigantic string of letters and numbers that form a very complex puzzle. And its size, in terms of megabytes, has grown from tiny to 150 gigabytes in the last 5 years. Hidden in the puzzle includes who owns how much and what their secret password is. It's called a blockchain. A blockchain is just a continuously growing list of data. Bitcoin stores the blockchain in a massive network of computers. This network is open to anyone to participate in and is decentralized. However, it does use what's called cryptography to protect the contents of its blockchain. And it also uses cryptography to validate transactions. So Bitcoin's blockchain stores who owns which coins, all transactions ever made between all parties. It knows how and when to create new Bitcoins. It knows the maximum number of Bitcoins is 21 million. It pays computers that power its network with Bitcoins called miners. It's everything gold-backed dollars were supposed to be before centralized powers corrupted the system and created $80 trillion worth of fiat money. So how exactly does Bitcoin work? This question is critical to trying to predict, number one, what the future price of Bitcoin will be, and then two, what the potential market cap and prices of other cryptocurrencies could be. In simplistic terms, Bitcoin is just a huge Excel sheet. In column 1, we have the addresses. Think of those as something like garages full of money or deposit boxes in a bank account numbers. Column 2, we have the private keys. With the key, you have access to the vault. And in column 3, we have the number of coins. This spreadsheet is held on millions of computers, and every time a trade takes place, it's updated on every computer in the entire network. In order to make a trade, you only need the address and private key. You pay a small fee in Bitcoin to have the Bitcoin network process your trades. The Bitcoin address is actually a small piece of the private key. And this private key is a random series of numbers that's impossible to guess. There are as many combinations of the password as there are atoms in the universe. Now the downside is if you lose your private key, there's no administrator who can reset your password. So how does Bitcoin keep your password safe if it's part of this Bitcoin blockchain? So this is really important. If we're really going to expect the cryptocurrency market cap to safely store $10 trillion worth of wealth or more in the next 20 years, the key to its survival is its ability to protect the capital held within its blockchain. And this will also be the key to each cryptocurrency's long-term success. Can they successfully store value, and what are their biggest risks? So what happens when you issue a trade, you're broadcasting an encrypted version of your password to the network. This encryption code that you broadcast is used to solve an otherwise impossible puzzle. And so these miners are actually just using pure dumb luck to take the code and reorder it in millions and millions of different combinations until the encryption is successfully completed. The miners of Bitcoin who run its network take the code, and the first to solve the puzzle gets paid a commission. This miner who does solve it first tells the rest of the miners to check its work. And of course, checking the work is a lot faster than doing the work. So after the rest of the network agrees with at least 51% consensus, they confirm the transaction on the blockchain. And now the blockchain is updated on the entire network. Everybody's just storing the same 150 gigabyte file. Now this type of cryptography is called proof of work. And if you were to broadcast a fake code, the miners would never solve the puzzle, so no trade would result. And so far, the Bitcoin blockchain has been imprintable. Bitcoin has been hacker-proof for 10 years. Now in the grand scheme of things, that's not very long. We saw that gold lasted for around 3,500 years. Then we had gold-pegged dollars for 450 years. And we've really been running on this, what I'll call funny money system, for only about 50 years. Other cryptocurrencies have only been around for a year or two at most, while the most successful have been around for between 5 years with Ethereum and 8 with Bitcoin, in terms of having heavy stresses, uses, and people trying to attack their systems. And so the market cap of Bitcoin has grown very quickly. And you can see it went from nearly nothing to exploding in 2017, pulling back in 2018. And in case you can't tell, I expect Bitcoin to explode to new highs based on how much inflation has been created in the normal monetary system and how much is going to continue to happen because governments have no way to stop it. Now, the market cap represents how much wealth is stored in a given asset. With $80 trillion in the total global economy, 150 billion market cap for Bitcoin is still tiny. Bitcoin's only 0.1875% of the total money supply. Now, just a summer ago, it was actually a third of that, so we can see it's growing rapidly. But if we look at gold's market cap at 8 trillion, that can give us some potential clues for where it may head to next. In fact, Bitcoin's price could jump to $100,000 if its market cap grew only to 1.5 trillion from 150 billion today. Now keep in mind, in 10 years from today, the $80 trillion money supply may double to 160 trillion, and that might be a lowball estimate. You can see the US money supply has doubled in the last 10 years. But the problem is our costs are not getting smaller, they're growing exponentially. And if we look at the growth of gold's market cap, it grew from $2 trillion in the 80s to $10 trillion by 2010. And if Bitcoin is better than gold because it's more rare than gold with 21 million total coins, it stores nearly infinite value on a small USB stick or piece of paper. So we can store the same amount of wealth in this vault on a little piece of paper now. But in reality, it's stored in a network across the entire globe of computers just like this powering the Bitcoin network. And also, Bitcoin's better than gold because it's more divisible. It's actually split into 1 million pieces called satoshis. And right now, one satoshi is worth 1 cent, while Bitcoin's worth $10,000. By the time Bitcoin grows to $1 million, one satoshi will be the equivalent of $1 US. Now, gold can't actually be used to buy anything. It just stores value in vaults and primarily is used to back the respect of different currencies. And we've seen all the major governments hoarding gold in the last few decades because they all see the same crisis unfolding. Another benefit of Bitcoin is there are no fake Bitcoins. A Bitcoin is a Bitcoin is a Bitcoin. Here's a clever 10-ounce gold bar that's actually just a foil wrapper. Now, you can't do that with a Bitcoin, but I would argue there are cryptocurrencies that are the equivalent of fake gold, fake Bitcoin. And so think about it. What is to stop Bitcoin from crushing gold? Let's not even talk about it crushing normal fiat currencies, which is arguably a lot worse than gold. But what will stop it from growing to the same size as gold's market cap? Think about Amazon's impact on malls and retail shops and how it happened almost out of nowhere. Who would have suspected in a decade we would go from thriving malls to empty malls across the country? Look at the retail bankruptcies. Amazon came in and did it better and cheaper. Think about Netflix versus Blockbuster. I'll never forget the Friday nights loading up on a bunch of Blockbuster videos, having no idea what we were renting and paying more for a single night's worth of videos than we do for months of Netflix action. Or how about digital photos versus print? We can see digital versus film as digital is taking over the revenue of consumer spending in the last 10 years. So what's the case for $1 million Bitcoin by 2038? That's 20 years from now. Let's say the money supply grows to $160+ trillion, and that would really mean that they actually slow down the inflation of currencies rather than continue the path of exponentially increasing the money supply. Well, if Bitcoin were to double gold's current market cap of $8 trillion in the next 20 years, that would be 100 times return, taking Bitcoin from $10,000 to $1 million per coin. Now, to play the devil's advocate, how could Bitcoin go to zero? Are there better cryptocurrencies? Don't forget the MySpace Facebook story. MySpace started out big and strong, but Facebook did everything better. And look what happened. MySpace went out of business and Facebook took over the social network space. So I'll cover the other cryptocurrencies last. But first, it's important we understand what a 51% attack is, as this is the biggest threat to all cryptocurrencies. And what's scary is in 2014, when the market cap was much smaller, tiny, for Bitcoin, a certain mining group actually obtained 51% of the network power. And this is a potential death blow to any cryptocurrency. If one party owns 51% of the Bitcoin network, they can validate fake transactions. They could put fake trades moving money from other accounts to their own in the blockchain. Then they can quickly claim the trade is valid and tell the network to check their puzzle to confirm it's true. But because they own 51% of the voting power, they can say the puzzle is correct even though it's obviously not. And what happens is Bitcoin loses its decentralization, trust, and what follows is everyone would sell. Losing the decentralization and trust of the blockchain is the cancer that can kill any cryptocurrency. So right now, the level of network power for any one group is currently below 25%. And we can see these major powers who are mining Bitcoins. And so this is really the biggest threat to Bitcoin and to any other cryptocurrency. Now, it's out of the scope of this video to get into the details of what a 51% attack on Bitcoin might look like. And currently, it would be by far the hardest cryptocurrency to break from a 51% attack. But as an investor, we want to know where we should place our money in hopes of a return in the future. Is Bitcoin's length of existence, massive network, largest market cap, most trading volume enough to keep it the king of cryptocurrencies? And so we can see in the last year especially the domination of Bitcoin in relative value of the entire cryptocurrency market has been on the decline, which would indicate that it may or may not remain the king or even survive. Here are alternative currencies I favor for generating higher returns than Bitcoin. First and foremost, we have Ethereum. Now, while Bitcoin would be considered a deflationary currency because people lose their currencies, their Bitcoins, there's a limit to how many are ever created. Ethereum is not. It is actually an inflationary currency that can create an unlimited amount of Ethereum. So it's yet to be determined what's a more successful model. If we go back to the Great Depression, a lot of that can be blamed on not being able to control the money supply relative to the growth of local economies. And even though gold was somewhat decentralized around the world and in limited supply, it still had central authorities who controlled the gold supply. And eventually, this led to trade wars, currency wars between neighboring countries, and the smaller the country, the more devastating the effect. Ethereum doesn't have this issue, and I will spend an entire multi-hour video just discussing the big differences between Bitcoin and Ethereum. Most of us know Ethereum as the smart contract platform, which actually lets you create applications to run off the base of Ethereum. But there's a lot of other technologies, and I'm just going to flip through their charts and put their name out there. I'll be covering each currency with a 30+ minute video in the upcoming weeks and months. But these are the same coins we hold in our portfolio. Ripple, Bitcoin Cash, Litecoin, Stellar, Neo, Dash, Monero, NEM, Ethereum Classic, Qtum, Zcash, Amigo, Lisk, Verge, 0x, Augur, Dogecoin, Golem, Digibyte, Vertcoin. Now, I do want to throw out that some coins out there are the equivalent of fool's gold, and they've been fooling a lot of investors lately. Coins like EOS, who've marched to the top of the market cap board, top of the trading volume, and they don't even have a working blockchain. They're supposed to launch a network soon and compete with Ethereum, but there's no ecosystem of developers. There's no network, there's nothing, yet it's valued around $14 billion. And more importantly, the EOS infrastructure is running around claiming to be gold, but in reality, it's fool's gold. It's not decentralized. Loves to talk about how fast and quick it is, yet to do so, it creates centralized authorities. And Tron, another marketing hype machine. Lots of hype, lots of giveaways, lots of prizes, but there's no use of Tron, there's no applications of Tron. all they have right now is a super ghetto version of Google Chrome, and it's claiming a $5 billion market cap right now. So this is near the end of today's video. It's a huge discussion to compare Bitcoin to Ethereum, much let alone the rest of these technologies. In general, I like to spread my risk between the top technologies based on their trading volume. There's extreme amounts of money and research being placed into the brightest minds around the world to figure out exactly which technologies have the best chance of success in the future. So our strategy is simple: follow the money, and we too can do extremely well. So there you have it. Go ahead and start jumping into the steps below. Pay attention to the daily videos. You're just getting started into your journey into cryptocurrencies. We welcome you here at Portfolio Builder, and please reach out to our support team at any time.